Is your money sleeping in a bank? Or worse, losing value? What if there were assets out there that could do more for you? Hey there, financial explorers. Welcome to Moneycraft Masters. The banking world has sold us the dream of safety, but at what cost? Today, we're challenging the norm and unveiling 6 assets that could be safer and more lucrative than the cash in your bank. Ready for a financial revelation? Let's get started. And hey, if you find these insights game-changing, hit like, share with your friends, and don't forget to subscribe for more wisdom nuggets. As we journey through the annals of financial history, one thing becomes abundantly clear. Money's value isn't static. From the days of the gold rush to the Wall Street boom, people have constantly sought better ways to protect and grow their wealth. But in recent times, an unsettling trend has emerged. Splation, the silent wealth diminisher, has been on the rise. While your hard-earned cash sits in the bank, its purchasing power erodes bit by bit. Consider this. A loaf of bread or a gallon of gas you buy today might be significantly more expensive in a year. And the sobering reality, the interest rates provided by most banks barely keep up. So the pressing question for every savvy individual is, how can we shield our wealth from these financial headwinds? How can we ensure our money doesn't just sit, but thrives? This exploration led us to some fascinating assets that might be the answers. Let's venture into this world together and discover the alternatives to traditional banking that could amplify your financial future. Precious metals. Stepping into the realm of assets, our first stop is the world of precious metals. Gold and silver aren't just dazzling trinkets or the stuff of ancient treasure tales. They have been foundational to human commerce for millennia. Gold, often dubbed the crisis commodity, has a storied history of holding its value. When stocks plunge and currencies waver, gold shines even brighter. Its value isn't just rooted in its scarcity or allure and its resilience against inflation and economic downturns. Silver also trails its golden cousin, offering a more accessible entry point with similar protective qualities. But how does one invest in these metals? While bullion and coins are popular tangible options, there are modern avenues like exchange-traded funds or ETFs that track gold's price. And if physical possession isn't your thing, consider mining stocks or digital platforms that allow you to buy a stake in real gold stored in secure vaults. As with any investment, it's vital to do your homework to understand the nuances and potential returns. In essence, precious metals offer more than just material value. They bridge ancient trade practices with modern-day financial strategies and are the golden ticket to safeguarding wealth. Real estate, from gleaming urban towers to tranquil suburban homes, real estate is a testament to one of humanity's most basic needs. Shelter, but beyond just bricks and mortar, properties offer tangible, lasting value. Welcome to our second asset. Real estate isn't just about owning a patch of earth. It's an investment in a tangible asset that historically appreciates over time. Unlike stocks or bonds, where value can be intangible, real estate gives you something you can see, touch, and utilize. And in times of inflation, when the cost of materials and land rises, property often becomes a coveted asset. Beyond appreciation, real estate can be a source of consistent passive income. Renting out a property can provide a steady cash flow, sometimes even outpacing the interest from a savings account in a bank. Moreover, with platforms like Airbnb, even a spare room can become a revenue stream. But it's not just about buying any property. Location, infrastructure, future growth prospects, and even the kind of property are pivotal in determining its investment potential. As they say in real estate, location, 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 location. Researching, perhaps even collaborating with experts, is crucial before diving into this venture. Real estate is more than an asset. It's a legacy. It's a piece of the world you can call your own and potentially pass down through generations. And in a fluctuating financial landscape, it can be the bedrock of stability and growth. Stocks with dividends. As we navigate the vast financial seascape, we now anchor at our third asset, dividend-paying stocks. While the stock market might seem like a roller coaster to many, there's a subset that offers both potential growth and consistent income. Dividend-paying stocks belong to companies, often well-established in their industries, that return a portion of their profits to shareholders. These dividends are typically paid out regularly, be it quarterly, semi-annually, or annually. Think of them as a thank you note from companies for your trust in their vision and future. while stock prices can be volatile. Dividends from robust companies tend to remain steady or grow over time. This dual benefit, the potential appreciation of the stock itself and regular dividend payouts, makes these stocks a darling for many investors. This can be a sweet spot for those seeking growth and income. However, it's pivotal to note that not all dividend-paying stocks are created equal. The sustainability of dividends, the company's financial health, and prospects should be thoroughly analyzed. Some sectors, like utilities or consumer staples, are historically known for their stability and consistent dividends, but it's crucial to diversify and stay updated with market trends. In summation, dividend-paying stocks can be a twofold boon: a stake in a company's growth story and a periodic income stream. By carefully selecting and curating a portfolio, one might craft a financial symphony that resonates with prosperity and foresight. Like, share, follow. Think of this video as a seed of financial wisdom. If you water it with a jades, like, nurture it with a subscribe, and let it spread with a share, we can cultivate a forest of well-informed investors. So if you're gaining value from our insights, let's grow this community. Bonds, sailing onward in our financial exploration. We anchor next at the bastion of traditional investment, bonds. Often seen as the calmer cousin of stocks, bonds are fundamentally IOS, where you lend your money to an issuer, be it a corporation or a government, in exchange for periodic interest payments and the promise of getting your initial investment back at a set maturity date. Bonds are, at their core, instruments of debt. When governments need funding for infrastructure projects or companies wish to expand without diluting their stock, they issue bonds. In return for your trust, they offer interest, or as it's formally known, coupon payments. These regular payouts can be a reliable source of income, mainly from highly rated issuers. However, bonds aren't risk-free. Their prices can fluctuate with market interest rates. When rates rise, bond prices typically fall, and vice versa. Additionally, there's the credit risk, the possibility that the issuer might not be able to pay back. Hence, the world of bonds spans from investment grade, deemed the most reliable, to junks or high-yield bonds, which carry higher risks and potentially higher returns. Diversification is key. Depending on your risk appetite and financial goals, a mix of different bond types and maturities can help smoothen out potential bumps. Whether you're a young investor seeking diversification or nearing retirement and seeking steady income, bonds can fit many financial narratives. In the grand tapestry of investment, bonds stand as the timeless threads, weaving stability with modest growth. They remind us that there's still room for grace and predictability in the chaotic dance of finance. High-yield savings accounts. Continuing our financial journey, we come to an asset that marries the old with the new: high-yield savings accounts, offering a modern twist on the age-old practice of saving. These accounts promise better returns than traditional savings, all the while keeping your money accessible and secure. In essence, high-yield savings accounts are supercharged like your regular bank accounts. They offer significantly higher interest rates, ensuring that your money doesn't just sit, it grows. Think of it as giving your savings a gentle yet steady boost without venturing into the volatile realms of the stock or bond market. So, what's the catch? Why do these accounts offer more? Online-only banks provide many high-yield savings accounts with no physical branches to maintain. Their operational costs are lower, and they often pass on these savings to the customers in the form of higher interest rates. Of course, diving into digital banking might raise concerns about accessibility and security. However, technological advancements ensure that online banking is often just as secure, if not more so, than traditional banking. Plus, with 24/7 access via mobile apps and robust customer support, managing your money is at your fingertips, day or night. High-yield savings accounts are the gentle ripples in the grand spectrum of assets, not the tumultuous waves. They represent a safe, straightforward, potent way to grow wealth. These accounts could be your financial sanctuary for those seeking peace of mind combined with better-than-average growth. As we chart our way back through this financial odyssey, it's evident that the world of assets is as vast as diverse. Our choices are plenty, from the lustrous allure of precious metals that have stood the test of time to the modern innovations of high-yield savings accounts. Yet, every asset carries its blend of risks and rewards. while real estate offers tangible holdings with potential for rental income and appreciation. It requires significant capital and market understanding. Stocks with dividends provide growth and revenue but remain subject to market volatility. Bonds, often considered safer havens, still dance to the tune of interest rates and issuer credibility. Perhaps the most pivotal takeaway is the age-old wisdom of diversification. Spreading your investments across multiple assets can help mitigate risks and harness the strengths of each. Your financial journey, goals, and risk appetite will guide your best choice. But remember, each investment avenue, while promising, requires diligent research and understanding. The key lies in choosing the right asset and genuinely understanding its nuances and potential in the larger financial landscape. In summary, our financial seas are teeming with opportunities. With the right navigation, a balanced approach, and continuous learning, the horizon is rife with potential for growth and stability.